It would destroy the firm's reputation around the streets. Completely unrealistic. It would never happen. So everybody's talking about industry season 4 at the moment. We thought we'd dive in and look at just how realistic one of these scenes is.
Minister for Industry.
So what they do have realistic here is the exact way that the fund office would look, perhaps a little bit posher than I was used to, but they set up the Bloomberg screens and Harper shouting at her trader as if she hates him. There's no niceties on a trading floor in a hedge fund. It is just pure instruction. The least words possible to get the message across and instruct the trader on what they need to do as quickly as possible when the story is hot.
For the rest of time. For children and the internet users' rights of both free expression and privacy are protected.
Yeah. Okay, we're short, chunky for a mid cap, 100 bars, 3.2% of float.
The member for South Thanet.
So she asks her trader here to get borrow. Now, borrow means that you're going to try and short a stock. You can't sell something that you don't own. So you have to borrow it from somebody else and then you sell it in the market.
Jail sentences longer than paedophiles.
Unfortunately, that's where the realism ends in this clip, because as we see the trader going on to short £100 million of a mid-cap stock, which is 3% of the company, there is no chance he'd manage to do this without moving the price significantly or getting a phone call from the bank afterwards and the bank cutting off the hedge fund so they wouldn't be able to trade anymore. It would destroy the firm's reputation around the street, and the hedge fund's reputation would be shot to pieces.
Down here, down 8%.
Come at a large personal cost to the consumer.
There's no way that he would manage to sell this many shares in the market, so he must go to an investment bank and deal on risk. Now, that means he would go to Morgan Stanley or Goldman Sachs and he'd say, where can I sell £100 million of siren stock? And obviously the investment bank knows exactly what's about to happen, so there's not a chance in the world they would take that trade. The stock would drop 8% before they even managed to get the position on, because he's calling round asking to sell this stock just before a major government announcement. Now, you can't just go and hit a bank in £100 million of stock. I remember this happening to us 2 days before Carlsberg reported their earnings. Now, 2 days would normally be enough time to get out of the stock, and we take it at a little bit of a discount. So let's say it was trading at 100. Somebody wanted to sell us £100 million of stock. So we would come in and bid 98. So we already had a 2% discount on where the stock was trading, and then we tried to sell it fairly aggressively over the next 48 hours. However, we moved the stock 4-5% down, so we decided to keep the last $10 million. And what happened? A big, fat profit warning from the company, and it subsequently dropped 20%, and we lost another £2 million on that trade. So Harper trying to sell £100 million of this within 10 minutes just before a huge announcement by the government, which could affect the stock. Completely unrealistic. It would never happen.